Hello traders and welcome to the Friday wrap-up, September 11th, 2015. We do this after the New York close. Traders coming to you live from Pattaya, Thailand. Actually, it's Saturday morning for me as I'm 11 hours ahead of Eastern Standard Time, so it's 8 a.m. for me recording this video. I know it's still, it is still Friday in the U.S., but it's Saturday morning for me and it's looking beautiful outside. Bright blue sunny skies and white sandy beaches, and we're going to get this done and head to the beach for the day. Traders, this is brought to you through FXCL Excellence in Trading. Please come visit us at fxclearing.com for your trading solutions. All right, let's get a move on. We got over 15 charts to look at. We're looking at price action on some daily charts today, so let's get a move on. Traders, my name is William Gilda. I'm your moderator for the Market Opening Preview Series. Every single Friday after the New York close, and this is the Friday wrap-up, not the market opening preview. We do the market opening preview every day, Monday through Friday, and we do that before the London Open. So I get confused sometimes. So let's take a look at how my career started. I started my career in 2006, and in 2008 I retired from a wonderful 27-year career as a firefighter paramedic out of the great state of Florida. Traders, came to Thailand 9 days later for a 3-month holiday. Well, it's 8 years later. I'm still here, traders. I'm still in Thailand. Absolutely love living in Asia. The time zone is absolutely great to trade Forex. You can actually trade all 3 trading sessions, only about 3 hours in the New York session. That'll bring up to about 11 o'clock at night. But you can trade, Asia, London, and New York. It's really great. And it's basically just like a regular workday. No, I do not sit in front of my computers for 13 or 14 hours a day, folks. I do get 2.5-hour break here, an hour break there. So my day is broken up. And if I got to go do something, I go do it. It's not a big deal. But my trading philosophy is that, using fundamentals and technicals, as I'm a technical trader, but you have to know fundamentals, especially in today's sentiment of the market. And, looking for opportunities and probabilities that the trade is going to be successful on my side before I enter my trade. That takes a little bit of work. And price action is real important. In fact, price action is really everything when you think about it. And that's why we do this Friday wrap-up, so we can look at price action on the daily chart and see maybe what's coming ahead in the next week. All right, let's get over to legal stuff. We got a lot to do today. This is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. Okay, commentary for the week. I thought this was a pretty crazy trading week. We had a lot of slow days, a lot of really boring days. With no price action unless you were scalping in and out. And unfortunately, I think that's going to happen until next Thursday, until the FOMC turns out and says if they're going to raise interest rates or not. The polls and the media and the gurus, they're all saying that the Fed is going to raise interest rates. I really hope they do and get this done and over with and just do it. What they say, just do it. Well, just do it and get this first interest rate hike done and over with, and we'll get the media from talking about that, maybe something important. And we get back to some normal trading. But I think that the next 4 days, Monday through Thursday, I think it's going to be really a drag because people aren't trading. People are not getting into positions, and if they are, they're scalping, and they're getting out, which makes it really hard. And you're gonna see a lot of charts where a lot of these daily charts are in ranges because people are not staying in their trades. They're getting in and they're getting out because they don't trust the market. The market's all over the place. If we take a look at the indices, green day on the U.S. markets and on the European markets, all the indices are in the red, right? The FTSE, the CAC, the Eurostock 50, the DAX, all in the red, right? So then you turn over and you go to Asia, and everybody was in the green except for the Kospi out of Seoul that was negative 1.06%. So quite a jolting week, I guess we can call it, and a lot of boredom. As traders, we're taught and meant to trade because we're at work, right? This is my business, this is how I make a living. So you're meant to clicking that trigger and being in trades, and it's really tough when you go 2-3 days and you don't enter a trade, and you're spending 10, 12 hours looking at computers or your cell phone at charts, and things are not happening. It gets a little frustrating, but I think we have exciting trading ahead. Everybody should be back to full steam Monday. All the schools are back. Everybody's back to work. That big hedge funders were back last week. They were just looking at charts. But I guarantee you, they're waiting for the Fed. Everybody in the world is waiting for the stupid Fed to make a decision. I shouldn't call them stupid, but because they're not. They're very smart. They know exactly what they're doing, and they saved the U.S.'s butt in 2008 with that crisis. So the Fed is not for surely stupid. That was a bad comment. So we'll see how it goes, but we have a lot to look forward to next week, and we'll see what happens. So today we're going to take a look at some daily charts. It means every single candlestick on the chart is a daily candle. We're going to go through these, pretty rapidly. I don't want to bore you which you'll probably see this on a Saturday, as it's coming up to 8:30 p.m. Eastern Standard Time. So let's get started. Take a look at some charts here. Here's a dollar Swiss. Nobody's buying the Swiss franc. The Swiss franc is pretty funny. It's it's an inverse of the euro dollar. Usually it's opposite of what the euro dollar is, but nobody's buying the Swiss franc. But we had Wednesday, Thursday, but Friday was an up day. It was dollar strength. I don't know why we have a red candle. Probably profit taking. But the dollar Swiss here, it's definitely bullish, and it's in an uptrend here. So this is just a pullback. And I bet if you fib this, you'll see that this is probably at a fib, and this is going to bounce. If you look left of the chart at where price action is right now, we're at support. So, I expect this to continue its way up, as I expect the euro to continue its way down. So let's see what happens. All right, pound dollar. Pound dollar's been really strong this week. 3 out of our 5 days had up days, and remember, these are daily charts, so these are a lot of pips, and the pound has been moving quite aggressively. Looks like we ended as a doji on your Friday. Got to keep remembering I'm on Saturday morning. On Friday, the last candle, it looks like that's an indecision candle. But as far as the week went, the pound was very strong, and I keep saying that there's possible change of trend ahead of us, and that the pound might end up doing that. However, again, it all depends on what the Fed does next Thursday. I think no matter what they do, if they raise rates or they don't raise rates, the dollar is going to remain strong. Here's our good old euro. Euro had some nice up days. The dollar had some. Not that the dollar was weak. It wasn't that the dollar was weak. It was just that the euro was stronger. And this is like the sixth candle now. 1, 2, 3, 4, 5, 6. So we're in the sixth candle now. That's a pretty bullish candle that closed yesterday. However, the indices out of the U.S. were all in the green at the close of Friday. So the Dow was up for the week, and they just got by with an up week again. On a Friday. So our good old candlestick guru, Steve Nissen, says that usually charts will go 6 to 11 candles and then make a change. So this has room to, we got resistance up above there. That's pretty strong resistance because, with this 1455, you got a resistance line, and then you've got the 200 exponential moving average. I don't think that's going to just slide on through there, so we'll see how that works. But I don't want to buy the euro dollar, by the way. I want to sell the euro dollar. So, all right, here's the dollar yen. If you don't have a dollar index or a dollar chart on your platform, and this platform, by the way, does not, that I'm using. This is FXCL's MetaTrader 4 platform. You can use the dollar yen as sort of an idea of what the dollar's doing. And if you take a look at this, this has been all over the place, but these are a lot of pips. Some days this gave off a lot of pips, but you can see it's in a range. It's, and the dollar is not obtaining strength; it's just maintaining where it's at. It's just stagnant. Take a look at the dollar CAD. Boy, the CAD is really taking a beating with this oil situation. This oil situation going from 35 to 45, that $10 range that it's in, has really affected Canada. And, that country is now in a recession, and they're hurting over this oil down at, I don't know what yesterday ended, but at one point during the day was at 43. So, it's really taken a beating. And now, who was it, came out and said that they expected, Stanley Morgan, I think it was, came out and said they expected in the next 6 months to see oil at $20 a barrel. I don't see that happening myself. I'd be pretty shocked. But Canada, that's their major source, and relies very heavily on oil. So they're taking quite a beating, and that's why you're seeing this dollar strength on the dollar CAD. Let's look at the Aussie dollar. The Aussie dollar, I don't want to buy the Aussie dollar, folks. Oh, sorry about that. I do not want to buy the Aussie dollar. All I want to do is sell the Aussie dollar. I don't want to buy this. I want to sell this. And it's showing that we had an up day week. And remember, it was really a shortened week because Monday the U.S. Markets were closed. So it's showing an up week here. This could be a correction or whatever. But again, I don't want to buy the Aussie dollar. That's for sure. I think the dollar is much stronger than the Aussie, and this is probably just a correction here. But I would, I'd love for it to go all the way back up to 72.25 at that yellow line there, and we'll just sell the hell out of it. Just sell it. We'll just sell it. No reason to get excited about it, but this moving up is great. Bounced off for support. Look at that. There, this. If you were trading this chart, no matter what time frame, if you look at this, this was at support. It had a decision candle. Then it gives you a doji, and then gives you a blue candle to start. Man, that's a trade. Put your stop 10 pips below it, 15 pips below it, and you're done. And you made a lot of pips there. You're looking at like 68.75, 68.90, and you end up your week at 70.82. That's a nice run. That's a nice run. Close to 300 pips there. So, not bad. If you know candlestick formations, and you should. There's only 7 you need to know, so it's not very difficult. And just go to YouTube and put in Forex candlesticks, and you'll have more webinars to watch it. It's a good thing to do on a Sunday afternoon. That's what I do. I love YouTube. I get more knowledge watching videos on YouTube. All right, here's the Euro Pound. Here's a good fight for you, right? The Euro was strong this week. The Pound was strong this week. So we would expect that the Euro Pound is in the way that it is. There's nobody dominating, that's for sure. So this is just, if you were trading this, if it wasn't a daily chart, say it was a 1-hour chart or 15-minute chart or 30-minute chart, and you were trading this, you'd say, wow, this is just in a nasty range. And I agree with you. It is, but this is the daily chart. So, we need to see some sort of action here. It's having a hard time with that 200 exponential moving average, isn't it? I'm looking at 1, 2, 3, 4 candles I couldn't get above, including today, Friday, not being able to get above that 200 exponential moving average. So what am I expecting for the week ahead? I expect no change. Again, until FOMC on Thursday, I expect no change. I expect we're going to stay in this range. I don't think anybody's going to bust out of this, either to the downside or the upside. And we're just going to remain in the situation we're at. I think the euro is going, and we'll get to a euro dollar chart, but I think the euro, is going to end up at 1350. 1360 maybe, and then it's going to drop like a rock, and it's going to go back all the way down to 1100. That's what I foresee happening. All right, let's take a look at the Euro Aussie. Now, I trade this on a regular basis, it's Euro Aussie, but it's been really hard this week. And, if you take a look at this daily chart, you would understand why. One day it's up, the next day it's down, then it's up, then it's down. The problem is that, we're looking at a daily chart, and, these candles are 70, 80 100 pip candles here, and the Friday candle close is a decision candle, and it's bullish, but the two candles before that, right, Wednesday and Thursday, are dojis, right? So, it's just like really wild. Look at Tuesday, which was really the start of the week, and, just big red candle coming down there, Very challenging pair to trade because every day you don't know where price action's going. It just changes all the time. There's no trending action. There's no trending here. This is just, sideways, and, as a pair that I look at every day, it's definitely a challenge to trade. If you're a Swissy, the only thing you'd want to be doing here is, going bullish. This isn't a trending mode here, and, nobody's buying the Swiss franc, folks. I'm sorry for those of you who live in Switzerland, but nobody's buying the Swiss franc. Everybody's, trading against it, in fact. The euro's strong, and it's just going to keep on moving up. I'd be buying this all week, buy anything against the Swissy that's, got some strength. Here's the euro yen. This is a pair that I use all the time, and I do a newsletter every day, and, I came out on Friday and I said, there's a good chance that this euro yen, this could be this to me looks like, this whole week, including on Monday, this is in an up move. This is now past the 200 exponential moving average on a daily chart. This could be a change of trend here. This could be a change of trend, which is really strange. And the reason I say that is because the yen is strong and the euro is strong. Takamoto and Kuroda was speaking, and they're getting ready to inject money into their economy, to level this currency out. So we gotta keep an eye on what's going on here with the yen pairs. When Kuroda starts talking on like every day, but he only started yesterday, so it's okay. But when he starts talking on a regular basis, get ready. They're gonna throw in the big shaboom, and they're gonna do something. But his assistant, I think it's Takamoto, and basically said that they have other tools and they're ready to utilize them if need be. So that tells me expect something out of the yen pretty soon. So we have the euro yen here, but the euro is stronger than the yen, and the euro just really outdid itself. But this takes out some of these highs. Exactly where it's at. If we get a blue candle on Tuesday in the Asia session, you can basically say this thing has taken out some significant levels, and we're into a bullish market here, and we've been bearish in the euro yen for 6 months. It's been a long time. Here's a dollar Swissy, and so of course the dollar is weak here, believe it or not. I don't know why, because it's an inverse of the dollar, the euro dollar, and the dollar Swissy does the opposite of what the euro dollar is doing. So the euro is going up, so the Swissy is going down. That's been that way since I've been trading. They're just inverse pairs. It doesn't make a difference what's going on in the world. They're just inverse pairs. One goes up, the other goes down. And that's just the way it is. That's the easiest way to say it. All right, here's the CAD yen, sideways, right? And that's pretty surprising. You'd think that this would be more of it. It's in a downtrend, but you'd think it'd be more because the CAD is so weak. But we closed yesterday as a doji. So I expect this to stay in a range. And because I don't expect the CAD to get stronger. And if oil continues to head down, now I did not look and see what oil closed at this week, but if oil continues to go down, that's just going to make things worse. So, we just really need to keep an eye on what's going on with that. All right, here's the good old beast. I really enjoy trading the pound yen. It's and I always say this: if you don't have 6 months of live trading, please don't trade this pair. This pair will beat you up pretty bad. But again, this pound is strong. Look at this. Basically we've had 4 days of an up move. And yesterday, I take Fridays as, you just got to take what it is, because it's Friday, it's profit taking. Markets finally coming back to full strength, and definitely Monday, I think we're going to be definitely back at full strength. So, yeah, this is pretty interesting to see this pound all of a sudden come out of its little cove and decide to show people where they're at. Here's the Aussie New Zealand. Now, this is in a range. Wow. Now, this is pretty easy to figure out. Why is this in a range? Now, the big blue candle is because Aussie had good data come out. That's why that is like that. But that's why that big blue candle is that it had some good data come out. So, if you take a look at this is in a range because basically you have week against week. I wouldn't trade this pair. I would not trade this pair. I mean, this is a weak currency against a weak currency, so just stay away from that for sure. And then you come to the Aussie CAD, and again, the CAD is weak, the Aussie is strong, in comparison to this pair, and why not? Absolutely. This is where you want to buy the Aussie, right? Wow, that's new. But again, you got to look at weak versus strong when you're trading, and then you got to figure out why it's weak versus strong, and that's the difference in trading today than it was 4 years ago. You could just look at a strength meter and say, oh, this pair is strong, this pair is weak. I'm just going to buy the strong pair or sell the strong pair. And today you can't do that. Today you got to look a little bit further and go into fundamentals and find out why the situation is what it is. Well, the CAD is weak because of oil. That's pretty easy. So now we know why this is. So if I was trading this pair, I would be looking to buy this next week. Here's Aussie yen. This is pretty funny. The Aussie's strong, but this is still in a nasty range here. I wouldn't, as I do trade the Aussie yen. This is pretty range bound. But this week, the Aussie was stronger than the yen for 5 days. Now, that Monday candle doesn't surprise me, being that there was no New York session. But the rest of it is, that's pretty strong on the part of the Aussie to give us 4 up days. But again, that's because the Aussie had good data this week. Again, you have to go to why is this happening, and that's why. And I expect Monday, Tuesday, Wednesday we're going to get red candles. As we move through the week, this is going to get weaker as we go. Let's take a look at the Swiss yen. The Swiss yen is again, the yen has issues, and then we have the Swiss. So we've had 3 up days here, and again, I wouldn't hang my hat on the Swissy. If I was trading this next week, I would definitely trade this back down to the downside. I would not put this to the upside at all. I'd keep this down on the downside. I'd be selling this if I was trading this. This is in a down range, so there's nothing to do here. This is definitely a short pair here. You can see that this is a bearish pair. This is not a bullish pair at all. So don't even fly that way. Or try to fight it, right? Okay, let's take a look at the New Zealand yen. This is the New Zealand yen, and I wouldn't trade either one of these, no matter what. I just leave these the way they are and don't touch anything. Just leave it. This is in a range, and again, a week against week, and there you go. You got everything in a sideways price action, and that's the way I would leave it. I would just leave it like that. And then, of course, our last pair of the day is going to be our New Zealand dollar. And again, the only thing I want to do with the New Zealand dollar is sell it. So, I'd love for this to come back up to this, what is that, 64.45? I'd love to see that come back up to there. And then take this back down to the other side, take this to the reverse side. But I just want to sell this. I do not want to buy this at all. Definitely want to sell the New Zealand dollar. We've been saying that for a year now. Look at this chart. This is so bearish. But I'd love for it to pop up to that yellow resistance line, and then we'll sell it. Traders, that wraps up our daily charts. Remember, this is brought to you through FXCL, FXCL Excellence in Trading. Traders, if you would, come visit us at fxclearing.com for your trading solutions. Pretty good website, nice economic calendar, and a lot of trading opportunities and education. Traders, on behalf of myself, William Gilday, and of course, FXCL, enjoy your weekend break and enjoy your time with friends, loved ones, and even the guy driving by in the pickup truck. Say, give a wave for me. Traders, enjoy your weekend break, and we'll see you on the next Asia session, which will be Sunday evening if you're on the East Coast of the United States. Traders, take care. Have a great trading week next week, and we'll see you then, of course, with the market opening preview every single day before the London Open. Take care, traders, and we'll talk to you next time. Bye-bye.